Good evening once again. Welcome to another training session here, and this is an introductory video for new students. This is the first video you need to watch before you start watching any of the setups and learn them and come for an interview. So I'm just going to talk about introduction to currency trading, stock trading, commodities, indices, and why you should be a trader. So when you talk about currency trading, what is currency or foreign exchange trading, and why does it exist, and why do you need to be a trader? Well, currency trading is or foreign exchange is just a means of international transactions, because the whole world doesn't use one currency, and each world has a different fiat currency which is not backed by anything. So we need to engage in international trades, which one country, for instance British, doing business in Europe or America or Asia, can't use their pound, so you have to convert your pound to, if it's in America, the US dollars, or if it's in Japan, you have to convert your pound into the Japanese yen, or if it's in Europe, you have to convert your pound into euro. The same things applies to tourists. I live in the UK, so if I have to travel to Italy or Germany, I can not use my pound there because their currency there is euro. So I have to change my pound into euro in order for me to be able to pay for my accommodation, buy food, pay for transportation. And the same if I have to travel to United States of America or in Africa or Asia, I have to convert the pound into whatever currency that is. And the currencies are strengthened based on macroeconomic policies of the country, and countries in quotes that claim or assume to be world superpower like America have managed to convince the world to use the US dollar as the main form of most international trade, if not everyone. Then they have the G7 nations, so you have the yen, you have the Canadian dollar, Australian dollar, American dollar, British pound, the euro, the Japanese yen. These are the big seven countries, or so their currencies are quite much higher. Yeah, but don't forget that when you go to the Middle East, the dinar, and there is one of those countries whose currency actually is bigger than the pound. So the actually one of the dinar there is 50 pence. So you need £1 can buy you half of their money. So this is international trade, and there is 7 trillion transactions actually, which is traded every day. So the currency market is more volatile, or is the most volatile market in the world. And as you can see from the chart, so this is the GBA, that is Great Britain pound against the Aussie dollar. So the first currency is the base currency. So if the pound is stronger, what this thing means is you need more of Australian dollar to buy pound. So which means if you are exchanging your Australian dollar into pound, let's say if you're changing one Australian dollar is into a pound, you are not going to get £1 probably, because the pound is bigger than the Australian dollar. Maybe you're going to get about 50 or 60 cents depending on the exchange rate. But the first currency you have to take note is always the base currency. So this is the sell price. If you are selling, this is what you get, and this is buy price. And the difference between the sell and the buy price is called, probably it will be the premium. Yeah, or it's what the broker their profit is, what they put on. And normally the market maker that makes the market, when he has more demand than the supply, sometimes he makes the swaps or the difference bigger, just to deter retail traders from engaging um, temporarily in the market. Before, when there is equilibrium, um, everything comes back into order. And there are different participants in the market. We have the commercials who controls the market. Then we have the big banks or the hedge funds. Then we have small traders like us, who do most 90% of the time the wrong thing. So what, as a trader, you should be looking for is, you need to buy when the commercials or the hedge funds are buying, and you need to sell when the commercials or the hedge funds are buying, because the commercials are the people who control the market. So they will not let the price fall into certain value. If price start falling, like when they start shorting the price into a level that they don't support again, then they start buying to push the market up. So you have to, that is why those part informations are okay. Later when I'm talking about risk management, I'm going to show you where you find those court report and find commercial activity, how much they are long, how much they are short, and their net positions. So I want to buy when the commercials are buying, because they have to push the market up in order for me to make money, and they have to push the market down in order for me to make money. When the commercials are not active sometimes, and the hedge funds stay out of the market, then we have the retail traders taking their control in the market, and you can see the activities. These commercials could be the factories, like, if I'm going to buy cocoa, maybe one to eat. But when it comes to commodity trading, the commercials who, their activity certain time in the year, some currencies become very bullish or bearish, because that is when the commercials are heavily involved, because of the commodity. They need the commodity to protect, like cocoa, to or sugar cane, to process that into sugar and bring it to the factories that we go and buy. If I'm buying a sugar cane, I'm just buying to chew. Just I'm not going to, I don't, I'm not a commercial activity. But they buy. That is why we have the futures contract on the commodities. And commodities are the cocoa, gold, orange juice, pork belly, crude, Brent crude. They have to buy all this in their raw state. The commercials take contract of them and process them, and to petrol, fuel, other things, aeroplane parts, and things like that. And they are the major players when you come to the commodities which I've mentioned, or when you come to the currency trading, which is 7 trillion transaction a day. So as a trader, that is why you need to be a trader. You need to learn, you need to get mentored, because you just need a little bit of that to make weekly 4 figures, 5 figures, 6 figures like we create. So having said that, I think the macroeconomics of a country, which I'll show you where to get the calendars and see what news are coming, which can affect, impacts, the on a certain currency, and also a country's policy, international policies. Like right now, what is happening between Britain and China, US and China, is more like trade wars, diplomats being shut, and another country retaliating by shutting the others embassies. It could weaken or it could strengthen the currency. So if you watch, you can see the Dow has been dropping, because of the ongoing you know issue between US and China. And also you can see you have that alert here, and if price was broken above, that is going to go a bit further up. So this is it. And when you have a stock market which is here, the stock market is divided. Probably the way you can benefit is either 2 or 3. You can do what we call value investing, or you can trade as just like we trade stocks, commodities is the same strategy to make money out of it. And stock market during value investing is what I tell people: buy companies that you love. But value investing goes beyond charting. Charting is just technical analysis using part information to represent. So this is where you need to make money on a weekly basis, by buying the stocks like you buy when your rules of engagement are met, or buying call options, which is the same as buying the shares, but then you are using a leverage strategy. So and you buy a contract. So each contract, for instance, if I buy one Caterpillar contract, each contract represents 100 shares. So if I'm going to buy 10 contracts on this bullish trend here, so it's the 10 times 100. That's the number of shares I have, and you're going to choose your strike price. We have the near contracts, which are cheaper than the far contracts, and of course you don't. It has expiration date. That is the difference. When you are buying the options on the shares, it has expiration days, but you don't have to allow it to expire before you get out of it, and you don't have to allow it to expire before you cut your losses. When you are here and you feel the profit is enough, you can always take the money out, or you can wait for it to expire in profit and you take your money. So the options are a leverage strategy, which are cheaper than actually buying, for instance, 1,000 shares. So if I'm going to buy 1,000 shares, not actual shares, then it's going to be the current price, which is 137.53 times 1,000. You know, but when I buy 10 or 20 contracts, probably that is cheaper than buying the 1,000 shares. So these are all strategies we used to do. Or you can just trade it just like I'm saying. Or if you want to do value investing in companies, then you need to go beyond that. You need to pull out what I do: 5 year history or financial data of the company 5 years back. So we are in 2020, and the accounting year hasn't ended yet for this period. So I'm going to look at the data for 2019, 2018 up to 2014. That's 5 years back. And what I want to see is 15% growth when I'm doing certain financial ratio analysis. And I have to also look at the CEO of the company's statement, what he said he was going to do in 5 years or in 3 years. Have they achieved it? I want to buy company, value invest in company that has a lot of cash, not debt or little debt. And I like companies that the CEO of the company is the owner or part owner of the company that run it. And I want to buy companies that I love, what I think the future is going to look in 10, 20 years time, because that is what value investing is about. You want to find companies that will pay you dividend twice in a year, whilst your capital growth is also compounding. Like I bought Tesla, and I told a lot of people to buy Tesla in 2008 around $30, 28, $30, and Facebook, and they were laughing at me. But now I'm the one who is benefiting, you know. So, and Tesla even hasn't started. I mean, it's going to go more, probably 6, 7, 10, $14,000, because it's a very innovative in business in future. You know how the future is going to look, and it's not only into electric cars. There are so many things that is doing, you know. And when we talk about cash as well, you can look at Facebook, Google, Amazon, Apple. They have these are companies that are debt free. They have a lot of cash, and there are small companies coming up which actually it's not in the mainstream. That is why value investing is good. So just like charting, if you want to value invest, because when you buy into a good company, you buy for forever. And most of these companies are tiny now, coming up like $2.50. They are not in the mainstream. So you need to do your research, spot them, do your calculations, do your due diligence, buy them before they come into the mainstream, just as the commercials I'm talking about in the stock market, the hedge funds, investment banks. They are the people that push the company prices up, because they always want to invest into you know up and coming companies like Bill Gifford. I think in 2008, 2009, I don't know whether I would do the investment. The analyst was thinking like me, but he let them buy Tesla, and is going to, and these companies, they have huge funds to manage, so they don't buy like shares like I do. Maybe I'm buying a couple of thousands or 100 shares as my money will allow me. But if investment banks like Valley Gifford or JP Morgan comes and they want to invest in Tesla, they're actually going to buy a percentage of it. So probably their 1% or their 0.2% stake they want to buy might be sorry, it might be worth 500 million, 700 million, 1 billion. So they invest in they are putting this money in, and they are taking like 5% and stuff, and they are the ones that are going to drive the prices of the stocks up, its value up, because they manage pension funds, and they also manage money for the high net worth individuals. So this is what you have to do regards to stock investing. If you want to value invest, then you do more analysis than charting, but you can value invest and also trade it, because when you trading stocks companies, you are just benefiting from the dips and the bullish trend, the short-term bullish trend. So this can provide monthly or weekly income, or every 2 months income for you, because you are just benefiting from the drops here, and you can see the discount that the pandemic gave in Caterpillar. You can see from 149, or less, approximately $150 to 87. That is more than $50 a share. So here, let's say if you've bought 1,000 contracts of Caterpillar, you are going to do well. But after that, when this is a discount, so if the fundamentals of the company haven't changed, assuming you hold shares in a Caterpillar, which is a value investing, not trading, then the fundamentals of Caterpillar haven't changed, then the drop here is a discount for you to buy more. So if you buy more shares here, then you see in the 3-month period again, you have your 50 or whatever back, and it's going to even go higher. It's going to, this is the all-time high of Caterpillar, 172, and that is the resistance there, which is aiming to break. As long as Caterpillar break above the 160 level, then Caterpillar is going to maybe $200 level. And what companies do is, when they become big, like Apple have done it and other companies have done it, then they do a stock split, which double your, because then they want to lower the price, so that everybody can buy, or ordinary people can also jump into it, so they can do 7-to-1 stock split, or any, so that is all about it. Then so that's the difference. And you have the commodities, which I've talked about. So the commercials are the people who always control the market, whether you are in commodities, or you are trading currencies, or you are trading the currency market, which is the most volatile market in the world. And now there is cryptocurrencies. So I'll use this opportunity to talk about the difference also between trading and you are investing, and you are speculating. Investment is investment you actually have no idea about, so you are just putting small money into it to see what it will do. For instance, when the crypto currency markets started way back 2008 or 7 with Bitcoin, that was a speculative investment. And a company like a stock company also can be a speculative investment for you, and some will pay off, some may not, because you look at the company and it's like, wow, I have no idea what this company is doing, but maybe the fundamentals look good for me, but I don't like it. But okay, look, let me put $1,000 in it to buy their shares and see in 10 years time what's going to be. And in 10 years time it could be turn out to be one of the most lucrative investment in your portfolio, just as the cryptocurrency world did. Bitcoin made pay a lot of people's money, and now you want to take a small aspect of your portfolio into cryptocurrencies. But these are some things that I'm not looking at it, because if I'm buying, I'm in and I'm just forgetting it to see what the next 15-20 years is going to be. And if the cryptocurrencies are going to do well, then you see the good ones that you have in your portfolio are going to give you a good retirement and pay your kids college fees as well. So these are things that you have to take into consideration. Don't listen to what the world is saying. You always have to do your due diligence. You always have to put in the work. It's not difficult. I mean, to pull a financial statement of a company and calculate those financial ratios that, like asset test ratio, which will measure um, how a company can take care of its current liabilities, like current loans, pay its employees and staff. And if the company has cash in bank, and you want to look at management ratio, earning per share, these are everything. The formulas are there. So you just need to, if you can't have access to the company, email them or call them. Look, I want to have access to your 5-year financial statement starting from this year to that year, and they are going to post it to you in your inbox, or they are going to send you an email with the PDF, because by law companies financial records are public. Those that are public companies, all the financial records are public. But if it is not a public company and you want to invest in, then you need to speak to them and they will get to you. And one way also, which is better than value investing in company, if you are, it doesn't require a lot of finance, but if you are savvy entrepreneurs, that's what good entrepreneurs do. They go around the world, look for exciting ideas, new people trying to form a business, and you become equity investor in them. Sometimes you could even get in with 5,000 and say they give you 10% of the company, or $25,000, $50,000, depending on what you see, and you become part of the company. So you become an owner, equity investor. And when these companies break all barriers and they come out, and it becomes big like Facebook and stuff, and during the IPO, that is your 5% or 10% stake or 20% stake is worth, becomes millions or billions, even billions. And if the company keeps growing and growing, this is what where great fortunes are made. So but it's a lot of work, and it is also more risk, because if I'm starting an idea that I've put on paper, now I'm bringing into reality, there are a whole lot of stumbling blocks that you need to break barriers. All these companies we see doing well, some collapsing and stuff, yes, they just didn't come one day. They have to break barriers, and up to date they keep breaking the barriers. And the reason why most of the companies that we have these days are closing down, are going bankrupt, it's not because of the pandemic. It's because they failed to be innovative, and poor management, poor financial management. The competition is so tough that everyone is into innovation. So if you are a company, or if you are an individual, that's why I try to improve myself, in so many areas. I'm a nurse, I do masseurs. I'm a planning engineer, a good one. I'm a project manager as well. I'm a fund manager. I'm a coach. I'm a trader. You need, because the competition is so tough, so you need to arm yourself with a lot of tools if you are to survive. So if this industry is collapsing, then you can, your skills can be, because now when the pandemic came, you can see the areas that they are recruiting now is people who can do video editing, people who have IT skills. They can create content, they can write content, they can do adverts, online advertisement, Google advertisement. So many skills are not needed now in this era, and it's going to be like that in the coming years. So if the skill you only know, the degree you only have is not needed, it hasn't, it's not serving you, it's not needed in this era, then you're going to be obsolete. You now have to start learning a new thing, or you now have to start. That's why trading is a very good skill that everybody need to learn, because all you need is a laptop, not expensive one, and they're great to learn. A good mentor like myself, who is not interested in your money but interested in your success, and I've been there with people for over 10 years and I haven't charged them a dime. I'm always there to give them review, to take them through day or night. You call me, I'll be available. And this is why, as I was saying, most companies have collapsed. It's not because of the pandemic, because the the walls, the ratings have been on the walls, the alert has been there. Bad management, over leveraging, huge mountains in debt, you understand. And this thing has been there for a long time, and it's like house of cards. You keep piling, you keep piling, you keep piling, and it starts, getting weak at the bottom. So one goes off and everything is and this bad management, and without innovating, then your company is going to collapse. And this is happening. So the best companies are the ones who are looking for brilliant individuals to come into the company, bring ideas. It doesn't matter whether you've been in the company for 20 years. They give everyone opportunity, because most of the graduates even who are coming in has innovative ideas than the so-called bosses who are still in the company. And this makes the company strong, because they take the ideas from everywhere and they keep innovating. That is why a company like Tesla, Apple and others, they have succeeded. They keep passing the test of time. And it's going to get ugly, because most companies are in deep trouble, because they've not been innovative for so long. So that is my advice to you. Try to get something, try to be innovative. Other than that, you are going to find yourself in the company. And if it gets to a time that, okay, let's say the government can no longer give free money, then what are you going to do? That this is always there, and you start small and you keep going, keep getting better. And this is a family skill. Once you get to know how to master the skills and trade, you can teach your kids. This is not like it's not something you say I'm not interested in. It's something, it's a skill that will give you money. It will put money in your table for life. So it's not something like my kids doesn't want to trade. It doesn't matter if you are musician, or if you become a successful footballer, or the best actor or actress. You can still trade. It's financial literacy, which everybody needs, because you are going to write contracts about money. Accountants are going to be managing your money for you, and if they see that you are rich and stupid, you have no idea about money, you don't know anything about finance, you can't even understand your own bank statement, then they are going to circle around you like vulture, and the money will go away without you noticing that you are even bankrupt, which is happening to so many so-called celebrities and things like that. These things are what is happening. So I will urge every individual to take their financial lessons seriously, so that you actually understand your own finances. When you look at your bank account, you understand the assets, your liabilities. You can know your balance sheet, and at any point in time you see where you stand in terms of finance. And you know that your house is not an asset for you, because an asset puts money in your pocket, but the house you are living in is a liability, because you still pay mortgage, you still paying taxes on them, you still, so it's actually taking out money from you. It's not bringing in money, so it's not an asset. As asset to me is something that is bringing you money, put money in your pocket, either weekly or every 2 weeks or monthly or yearly, you know. So this thing is very very good things that people have to, our generation have to take, because there is something happening that nobody sees. And normally, the moves that happens quietly are the life changing moves. So read this before you look into the next other lessons, and let me know. And I'm going to do the risks management, money management, trade management, and psychology in the next video for you. And as always, I wish you happy trading, happy learning. The grind is not over, it includes the weekend. You don't finish when you are tired, you finish when you are done. Then you can celebrate. So don't quit. Remember, failure makes winners. Winners don't make failures. All those winners you see, they are winners because they once failed, and they became winners because they never quit. So don't quit, no matter what. um, have a good evening, and I'll see you again. Bye bye.